You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. His website is dollarcollapse.com. Welcome to the show, John.
Hey, Jim. Good to talk to you again. So we got the Fed announcement here. As we're speaking, they're talking.
And interest rates, no movement. Well, they changed interest rates once in 9 years last year. Did anybody think they were going to do much this time around?
Nah, the world is kind of in chaos. The consensus is starting to form that by mid-year, the Fed will be cutting interest rates again. And we're going to see quantitative easing as far as the eye can see everywhere in the world. So, and I think that's still coming. We've got China in turmoil, and Europe is kind of spinning apart right now, and the Middle East is in a huge war, and the U.S. is slowing down. Just this morning, news came out on three more big companies besides Apple, which yesterday reported that their sales have not only flattened, but they're actually going to go down year over year in the next quarter, which for Apple is huge. I mean, that's the quintessential growth company that they've just been rocking it with new iPhone models for going on a decade now. And now they're actually going to shrink in the year ahead probably. And that's pretty huge, but it's not an isolated event. As Apple was being digested by the market, Caterpillar, which is the biggest construction equipment company in the world, announced another just awful quarter. They see 16% drop in year-over-year sales after 2 or 3 years of basically depression. They've already had some really, really bad years, and it's getting worse, if anything, because the commodities complex is still shrinking. There's still massive overcapacity in the world of copper mining and iron ore and most other important industrial commodities. And so you don't need big earth-moving equipment if you're closing mines instead of opening them, or putting off your new projects until the market recovers. And so Caterpillar is suffering. And then Boeing, the world's biggest commercial aircraft carrier or maker, just announced that it was going to deliver fewer planes in 2016 than expectations and have a smaller year over year. And so, Boeing is traditionally a growth company in economic expansions. When the world is growing and airlines are buying more brand new jets and financing is easy to come by and more people are flying, Boeing does very well. Well, their announcement implies that the world is the opposite of that, and which makes sense. I mean, how attractive is air travel now? If you're, say, a tourist, where are you going to go if you're a tourist? Are you going to go to Paris? Probably not. And Egypt to see the pyramids? No. And would you want to go anywhere in the Middle East? Absolutely not. And Greece? No. There are a lot of places you just don't want to fly to anymore, and that's impacting the demand for long-haul flights. Meanwhile, you got that new virus. Jim, did you hear about that?
Zika.
Tika.
Zika.
Yes. And they're telling women of childbearing age not to go to places where that virus has been identified, and if they go somewhere like that, to put off having kids for several years. And so, under those circumstances, would you fly anywhere if you're a woman? You don't know if you're sitting next to somebody who has that virus, and then that screws up your life.
The only good thing I heard about it is that Canada does not have the kind of mosquitoes that carry Zika or Zika, depending on how you want to pronounce it, and probably both pronunciations on my part are wrong. But the fact that, your children could be born with deformities and have a smaller than usual brain, not good news for anybody planning a family. No. And so, given a choice, if you're a woman of childbearing age, especially somebody who's considering having kids in the short run, the last thing you want to do is fly to a place where that kind of a virus is possible, Not looking good in the long run, or in the intermediate term at least, for aircraft sales. And then another company that is really iconic but is looking extremely weak is Bank of America. And, it's made some management mistakes,
but it's also in a business that is really at the end of a long road. You know, the big banks have basically leveraged the world to the hilt, and they're running out of people that they can con into taking on more and more debt. So banking is turning into a really, really difficult business. And Bank of America is, the second biggest bank in the U.S., and it's a massive global player in lots of different markets, but it's not really positioned in a way that it can make a lot of money going forward. And its stock is down fairly big, you know, from 18 at the peak in the last year down into the 13s and 14s now. And that implies that the banking business, you know, with Bank of America kind of leading the way down, that's another sign of a global contraction. So you can look at all these different industries right now and see signs that the environment in which they operate has become very negative in the last year, or more negative if it was already negative in the case of Caterpillar. And that kind of implies that that we have a global slowdown that's building, which also implies that the Fed, which is right now alone among the world's central banks that are tightening in any event, is going to have to reverse course pretty soon, because the stock markets of the world opened this year with the worst ever 2-week start to a year. And let that continue a little while, and you got a bear market everywhere you look. And we aren't necessarily solid enough to survive a bear market intact now. You know, we're so leveraged around the world. Everybody owes so much money to everybody else that a financial downturn that is really just a garden variety bear market could start a cascade failure of big sections of the global economy. And the world's central banks know that. So outside the U.S., they're all talking about various kinds of increasing ease. You know, Mario Draghi's in Europe saying, oh, you know, we'll keep doing whatever it takes, don't worry. And the Japanese central bank is buying equities like crazy, and China is apparently considering a big devaluation of the yuan. So around the world, the central banks are acting like they get it. Only the U.S. Fed is not. And I don't think they can be the outlier for very much longer.
Well, some nations are in danger of defaulting. I think Venezuela is one of them because of the low price of oil.
Yeah. Well, a Latin American country defaulting isn't normally considered to be a systemic risk because it's such a common occurrence. But who knows now? You know, we haven't been this systemically fragile really ever. You know, there's never been a time when there's so many risks that could cause something serious to spread around the world. And so, yeah, who knows? You can't even discount Venezuela and Argentina and Brazil anymore. You know, you can't just look at them as saying that they're isolated incidents that don't have ramifications for the rest of the world. Or Mexico, you know. There are lots of things in Latin America that could become front-page news this time around. So who knows, Jim? There's just so much going on right now.
Well, financial experts say there's a 68% chance Venezuela will stop paying its bonds by October this year.
Yeah.
In other words,
they're talking about 700% inflation.
Wow.
In Venezuela. And you really can't manage a big government debt in those kinds of circumstances.
And being a leftist government, Venezuela hasn't made a lot of friends either.
No. So, you know, I don't know what the answer is for them, because, you know, you basically have to get rid of your old currency and replace it with something new. And they've done that quite a few times in the history of Latin America. So I imagine something like that is coming. But the question, see, in the recent past, the 1990s onward, crises in Latin America have impacted the big banks in the West who lent those guys money, and the world's central banks have intervened to bail out the Latin American countries in order to protect the big banks. So we'll see if we do that again. You know, it's not clear, it's not guaranteed that we're going to continue to do that, but to not do it would trade a long-term currency crisis for an immediate financial crisis. And I think central banks are afraid to do that, even though maybe if they understand basic economics, they see that by bailing everybody in sight out time after time after time, you create a fragile system that's eventually going to blow up on you. Maybe they're willing to accept that eventuality in order to avoid a near-term crisis. So, you know, who knows? We'll see.
And of course, in Canada and the U.S., they have legislation that allow banks to dip into your bank account to make sure they don't go bankrupt. Bail-ins.
Well, that's why, or one of the reasons why that they're going to act to protect banks one way or another, because once they have to start confiscating voters' bank accounts, then all bets are off for the next election. You know, how do you get reelected if you've just stole the bank accounts of 12,000 Bank of America account holders? You know, you don't. So they don't want that to happen, but they don't see an alternative that is less politically dangerous, because just bailing out the big banks like they did back in 2008, 2009 is now perceived to be handing the country over to Wall Street. And that's a political loser also. You know, Donald Trump and Bernie Sanders would both go up in the polls by 10 percentage points the day after something like that happened. So, you know, it's really a case of the central banks of the world having painted themselves into a corner that they can't get out of. And I think in the next year or two, we're going to see them be presented with, you know, a menu of completely unpalatable options and nothing else. And so they're going to choose one. It's not clear what they'll choose, but they're going to do something that really screws up the financial markets because they can't see anything else to do.
And then, of course, what about necessities? I mean, in countries that have to buy food in U.S. dollars, like Canada does in the wintertime, our inflation is going up, although the government inflation figures, for some reason, don't include food, energy, or housing. I mean, what else is there?
Yeah. Other than the stuff you need to live, inflation is well behaved. You know, they tell us that here too. But yeah, you guys have an interesting dilemma, because in some ways, lowering the value of a currency is a benefit. It helps your export industries. However, if you're a big food importer, you get an instant impact that the average person can understand. And it's really hard to rationalize that or explain it away politically, right? When somebody's food bill goes up by 50% in the space of 2 or 3 years, that's a very serious thing from the point of view of a sitting politician. So that's not a good thing either for Canada's leaders. So.
Well, cauliflower right now is $8-9 a head, and sometimes you can't even find tomatoes at any price.
Wow.
That's what's happening.
Well, I should plant a garden and go into the export business then, huh? Because we're not too far from the Canadian border.
Well, I wonder why we don't have more greenhouses here in BC. We do have a lot. In fact, in the summertime, our greenhouses export to the U.S.
Yeah.
But
well,
we need more.
There's a point at which food imports hit such high prices that it becomes economic for people to do that, and then you'll see it happen. You know, the markets will adjust to this. And I think a lot of people are just wondering whether this is just a little temporary blip or whether it's a long-term new normal. And once people conclude that it's the new normal, then you'll see greenhouses going up everywhere. You know, food production is very, very elastic. You can make a lot more if you need to. And there are times when having your own garden is a really great idea.
Well, a cousin in London is doing very well. She has an endorsement from the royal family. She takes cargo containers and grows vegetables and fish in them and parks them behind restaurants and supermarkets so they can get fresh fish and fresh vegetables right from behind the store. They don't have to import anything. Maybe that is the new business of the future for everybody when it comes to fresh food.
Well, yeah. And there's a thing you've probably heard of, too, called vertical farming, Jim, that I think is fascinating. You know, you go to a city and you take one of these empty buildings that aren't serving any purpose at all, and you turn it into a hydroponic farm where water circulates through trays on various floors, and grow lights provide the equivalent of sunlight, and you grow organic food right there in the building. And then at the bottom of the building, you have an organic farmers market that operates 365 days a year. And in that way, you turn an empty building in an inner city into an organic farm. And I think the time is coming for stuff like that, too, and that will totally revolutionize the agricultural world.
Well, you take a look at cities like Denver and Calgary that rely on the oil business. I'm sure they have lots of empty office towers right now.
Oh, you know it, yeah. And then any U.S. industrial city is all set up for that. You know, lots of old buildings with water and electricity hookups, but nobody wanting to work there. And so, yeah, this is the kind of thing that could be done, and they just have to streamline it so the costs are low enough that it's viable. But I think that's completely possible, especially in a world where food costs are going up,
And of course, with the Trudeau government planning to legalize marijuana, I guess the top floor, the highest floor would be growing pot.
Yeah, you could have a really widely diversified farmers market in those kinds of situations.
An audience that has the munchies.
Yeah, boy, that's right. Sell them the weed first, and then let them come back, and once they're really hungry, start buying your fruits and vegetables.
Organic nachos. To keep them going. John, is there anywhere in the world right now that's kind of an economic bright light, or are people just hoarding their cash? We just had a report in Canada that individuals have hoarded an extra $75 billion in cash because they don't feel secure in investing it anywhere, and corporations are sitting on nearly $100 billion in cash.
Yeah, and then at the Davos Economic Summit, one of the main themes was that for billionaires, it's time to stop playing the game, quote unquote, meaning just sell your stuff and raise cash. So that's becoming a dominant theme from beginning to end here. Regular people who don't trust their banks anymore and don't want to get a negative interest rate are raising cash. And the super rich, who otherwise would use that cash to buy London penthouses and yachts, are finding out that they already have a yacht, of course, and London penthouses are going down in value, and so why do that? So cash is starting to look really attractive to a lot of different people for a lot of different reasons. And then you get into the whole war on cash thing. It's not in government's interest to have the whole world go to, especially physical cash. And so they're trying to figure out ways to make that unattractive. So we have no choice, but even if we're selling assets and raising cash, we got to keep that cash in a bank. And once that happens, they've got you trapped. They can lower interest rates to negative 2 or 3%, and then in that way tax bank accounts, basically. And there's nothing we can do about it.
Or if they go to electronic money, they can tax every transaction.
Sure. Yeah. Once cash is either unattractive or flat out illegal, then there are lots of ways that they can tax us more or less secretly, unless you understand that fraction of a penny that they took out of every check that you wrote this month, or the negative 2% interest rate on your bank account, that those are actually taxes that the government is using to drain your account. It's not as clear as it would be if they just took money out of your paycheck. But that's coming. They're going to try it, and then we'll see if they get away with it.
They talk about negative interest rates being possible. Well, right now, if you have a regular bank account, they charge you huge fees to run it every month. Is that not in reality a negative interest rate? Because they give you 0.1% interest on it. So you get 25 cents, but they charge you $25 to own that account.
Yes. Yeah, in effect, that's a negative interest rate, which in turn, in effect, is a tax, a hidden tax. So, yeah, and once governments start to run out of money, they start doing things like this. They nickel and dime everybody in sight because they're desperate. And then people become criminals. We start evading these taxes because they're just so annoying and so onerous that you convert what used to be a law-abiding society into a really corrupt society. And that's what's coming as governments run out of money, because they all are out of money. There's no government in the world that is paying its way from directly administered taxes. And that means they're all desperate. They're all in some kind of a financial bind or another, and they're looking for ways to raise more revenue. And the obvious, honest ways have all been taken already. So they're going to do things like nickeling and diming us with little tiny fees that they hope we don't see, and negative interest rates and inflation. Inflation itself is a tax. And that's the final fallback of a broke government, is when they start devaluing the currency. And in that way, drain money out of savers' accounts in ways that are hopefully not obvious to the savers. Of course, I think we're sophisticated enough to get that. When our cost of living goes through the roof, people understand that. And they see it as the government doing it, even if they don't understand that it's actually the government taxing them in a secret way. So I think that this has a short shelf life. The policy that's coming next of taxing everything in sight is not going to last very long before the system is overthrown.
Yeah, well, they keep saying that, except you overthrow the system, what are you left with, and who's going to run things?
Oh, yeah. Revolutions aren't fun. And they very seldom immediately create a sustainable system. You know, even the U.S. Revolution, way back when, it took us a long time to create a constitutional government after we broke free of Great Britain. And that was the success story of all the major revolutions of the world, I think. You know, the rest of them have been bloodier and crazier and more dysfunctional than ours was. And so I think the preponderance of historical examples paint a really negative, pessimistic picture of what's coming next. You know, every major country has fringe political movements that are now mainstream. And so, you know, you're seeing Podemos in Spain and National Front in France and Germany. The neo-Nazis are rising again, you know, and in the U.S. we've got very possibly Donald Trump, a total political novice, going up against Bernie Sanders, an avowed socialist, in the coming presidential election. And so when things like that are happening everywhere, it's not some company or country-specific issue. It's the global financial system starting to spin out of control and causing political chaos. So when that happens, really all bets are off, because if there's political chaos, you can't have a stable economic system, right? And if there's no place is stable economically, where do you put your money? Capital panics, and it flows out of financial assets and into real assets. And so the people who own, you know, gold and silver and really, really precisely well-chosen real estate tend to do well in times like that. And most other people, you know, who have stocks and bonds in their 401k or whatever, tend to get burned. And so that's the time that's coming. And there's no way to speak more specifically about what that's going to involve, because we have too many moving parts. Too many things can go wrong, and too many things can spin out of control, and there's no way to know where the worst craziness happens and where there are islands of stability. You know, that's completely unpredictable at this point. So it's a terrifying world from the point of view of a regular person trying to protect their family's finances.
And you said real estate. Well, they call Vancouver real estate now trophy real estate, and yeah. Vancouver's just been declared the third least affordable city to live in the world, behind Hong Kong and Sydney, Australia. So does that mean real estate investments in Vancouver are more secure?
Well, trophy real estate has cross currents. For instance, when somebody in China gets worried about what's happening at home because things are spinning out of control, they might move some money into Vancouver without thinking about price. And so you get this terrified capital pushing up prices. At the same time, you reach valuation levels that are absolutely absurd, and that creates a bubble that will eventually burst and then send prices down by 40, 50, 60%. And so it's impossible to tell which of those forces will dominate in the year ahead. And so, you know, if you could spend $5 million on a Vancouver condo, I'm not sure whether it's a good idea or not. It might end up being a good idea in the short run, especially if Canada has to dramatically devalue the dollar. But you also might end up owning a $2 million Vancouver condo when the bubble bursts. So that's not what I was talking about when I said really precisely well-chosen real estate. You know, I'm thinking in markets that are economically stable because they are, for instance, they have a big agricultural component, and that are in a nice place, a nice part of that market where there's a lot of demand for rentals, something like that. That kind of a rental property will probably do okay. And because it doesn't cost you a fortune to begin with, and it's not in a bubble that's going to burst, and you'll have good tenants going forward, something like that is an asset that will probably do well. But of course, that takes some expertise to choose and manage. And that's certainly beyond my expertise, you know, and I think most people probably don't know enough to do that right. But for people who do know enough to do it right, yeah, you know, that's a thing that you can use to weather a storm.
I was going to say, in Vancouver, the downtown Eastside of Vancouver has the poorest income in all of Canada. You go across Burrard Inlet to West Vancouver, they're the richest community in Canada. Guess where you should probably put your money?
Oh, yeah. Yeah, you want to be on the wrong side of those tracks and then hope for gentrification, right?
That is happening.
Yeah, and so it's a speculation that might work out. But again, expertise. You got to know what you're doing when you move over to the poor side of town and start buying stuff. You need to understand that market because there are landmines there, and so it's not something you just want to cash out your 401k and go do unless you're already a real estate expert. So, I hate to be pessimistic and tell people there's nothing they can do, but there aren't very many things left that you can do with a high degree of certainty, in this kind of a world.
Well, so many people have taken the advice, time to cash out the shares and wait for everything to collapse and then buy them cheap.
Yeah, and there are times when that's a great idea. And I think this is one of those times where, you don't make any money by owning cash, but at least you don't lose. So if your goal is return of capital rather than return on capital, which to an extent it should be in times of crisis, that's not a bad thing to do, Pay off your mortgage. Buy your kids their starter home, something like that. Those are things that you can do with your cash that have some utility. And you at least won't get burned badly, as you will in a lot of high-flying stocks. We're watching the best performing stocks of the last 5 years get crushed in the U.S. in the first couple of weeks of 2016. Apple is down another 5 points today. Let me make sure that's true while we're talking, because that's what it was.
I was going to say the so-called fangs are being bitten.
Yes, they are. Okay, Apple's down 5.77%. And it's at 94 right now after peaking at 132 or so. So, this one decision stock, you can't go wrong by owning Apple. It's the greatest company in the world. Well, now you're down 40%. And, or 30%, sorry.
Well, don't forget Apple. I mean, they fired Steve Jobs, probably one of the most brilliant men to ever walk the planet. And they brought him back out of desperation. Now he's dead. What are they going to do? Because corporations tend not to like mavericks like Jobs because they think outside the box. They come out with radical ideas that you've never heard of, radical ways to promote them. And so as soon as you start a big company like that where it gets so big, the corporate mindset takes over. They become conservative and they stop innovating. And I think we're seeing that happen to Apple right now.
Well, and it's hard to be iconoclastically innovative forever. That's usually when a company is that way, that's usually with a couple of products. And then the next stuff they bring out is more mainstream and less differentiated because, how can you be awesomely brilliant with every single thing you do? It's a very hard thing to do for a company the size of Apple. They need tens of billions of dollars of revenue with every product they bring out, and that's just not easy, and so there was no reason to expect it to be easy. And they're still a great company with a range of cool products and lots of cash in the bank, and they're highly profitable, yada, yada. They just might not have been worth $700 billion or whatever their market cap peaked at. And, you can say that about the rest of the good companies in the world. Maybe they're going to continue. They'll be around for the next 20 years. They're going to keep making money, but their stock got way ahead of itself. And so now it has to be revalued to reflect the true value of the company in a tougher world. And so that means a bear market. And we're seeing that in tech stocks right now in the U.S. So there really isn't any place to hide out other than what's up today? Gold and silver. Gold popped on the Fed news. And that's because people are looking at a world that's in chaos and realizing that, well, okay, at least gold can't go to zero. I'm not even sure about Apple or Bank of America anymore, but gold has been around for 3,000 years and it's always been valuable. So let me just put my money in something that will still be valuable 20 years from now. I don't know what the value will be, but it'll be substantial because it always has been. And so that's when precious metals, when people start thinking like that, that's when money flows into precious metals.
John, thanks a lot for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble. His website is dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. By the way, John is also an analyst at Bearing Asset Management, so you might want to check out some of his ideas there. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.